We're going to talk today about a market update here for the Greater Lafayette area. And the data set that we're going to look at is Tippecanoe County specifically. And I got to say that I spent a lot of time talking about what is the Greater Lafayette area. And I'm talking about Lafayette and West Lafayette, unincorporated Tippecanoe County, but I'm also talking about all the surrounding counties, Fountain County and Warren County and White County and Carroll County. And I know I'm leaving somebody out here, and I apologize. They all follow the same trends. The volume is certainly highest where there are more homes in Lafayette specifically and in Tippecanoe County generally. But we're using this data as a stand-in for the entire area. But this is the data set. And this week we are actually going to look at the weekly market report. And the reason that I want to look at weekly as opposed to monthly is because of the government shutdown. And again, we don't delve too much into politics here other than how their direct effect on the local market. This is undoubtedly affects the local markets. So the shutdown started on October 1st. As of today, 41 days ago, we're about to get back up and running. It would seem the Senate passed a test vote last night. The House has to act now. I believe they're going to do so within, I think it was 72 hours, day and a half, maybe it was 36 hours. But sometime in the coming days, as members were getting back to Washington to vote on that. Basically, what I want to say is the shutdown had almost zero effect on the local market on a week-by-week basis. Now, part of that is because the local market is healthy. Real estate's a hugely local thing. But another part of that is that trends in real estate tend to be 30 days. Most closings, I don't have the exact percentage, north of 50%, somewhere between 50 and 90% of closings, I would hazard, close in 30 days. If you got cash, if you're a developer or a flipper, you can close faster. However, there are also homes that close slower than that, might be involved in probate and an estate sale for various other reasons that things go longer. So 30 days means that really, if the government shut down on October 1st, then we really wouldn't see that effect for about a month till about November 1st. An argument can be made for that, but we're going to look at a whole lot of data points. And I think that we're going to find that it just didn't have that much effect locally. Now, things continue to develop here as they always do. We're always just looking at a snapshot in time. But let's start here. I got to figure out which button to push. It's not that one. I think I want this one. Yep. So this is week by week through the end of October. If you can see this, the last bar on the chart is the week of October 27th. So that would have been 27, 28, 29, 30, 31 being Halloween, November 1st and 2nd. So that is when that data ends. And these bars are the number of new listings that have come to market in New County in that particular week. And the end over here, October 27th, so basically November 1st. And all the way over here at the end, September 2nd. So we have a little more than a year sitting here. And if you look at this chart, other than for the last 8 months, or 5-6 months till about February, it's essentially flat. Goes flat up a little bit, flat up a little bit. This is the seasonality of sales. And if we go back to September, we'll see that same kind of pattern. Then it falls off in November. So if we look longer term back to the week of November 25th, it's like, oh my goodness, the market crashed back then. And it's like, no, that's really not what happened. If we looked at the yearly trends, if we looked at over trends, it would look exactly the same. The real estate market is really tied to the temperature outside is the simplistic way to put it. The colder it is outside, the less sales that there are. So the market indeed did not crash back in November, December of 2024. But if we just look back, government shutdown October 1st. Here is the week of September 29th. New listings, 55. It's actually been the highest of the last 4 to 5 weeks. And again, follows that same pattern, first week and then a few weeks, but all definitely in the pattern. So we did 55, 39, 41, 46, and finally the last week was 44. And we can see that's just the pattern. We have about the same number of new listings coming to the market each and every week, going back months, basically through the beginning of June. There was a little bit of peak of May. Really, this data holds all the way back to week of February 24th. And preceding that, it was the winter malaise. So that's one data point. We got to look at all of the data points in relation to each other to go, what's the market look like? Is there a good time to buy? Is there a good time to sell? Is there a bad time to buy or a bad time or sell? And the answer is you buy and sell when you need to. Do you need a new house? Do you need more space? Do you need to downsize? Are you coming here for work? Are you moving away? Then that's when you sell. And waiting isn't going to really get you anything. We spent a long time talking about that particular data point. Next up, we're going to talk about inventory. And again, government shutdown October 1st. So the week of September 29th. Check it out. Each bar is the number of homes available for sale in Tippecanoe County across the entire county for that particular week. Look at these bars. For all intents and purposes, going back till about September 1st, flat. All within spitting distance of 350, plus a little, minus a little of 350. The last week of October, first week of November, was 411. Highest that it has been, but following this trend line, it's been ticking up. Now, what does this mean? This is the single biggest change in the highlights of numbers that we look through on a regular basis here on At Lafayette Live. The number of homes for sale has been increasing. It had been rather anemic over the last few years, and we can see this particular chart just goes back about a year, hovered around 200, a little sub 200 throughout last winter, and it's growing. Is this of concern? It's too soon to tell is the answer on that. Again, market seasonality, we're getting into a colder season. We expect a few homes to take a little bit longer to sell. The historical number for a balanced market in the county would be about 300 homes for sale. And anything north of that, anything higher than 300 would be a buyer's market. Anything less than 300 would be in a seller's market. We have undoubtedly been in a seller's market for a very long time. But I think with the population growth that we've seen over the last decade or two and the amount of housing that has not kept up with them, but has come along with those, I think that number is closer to 400. And it's hard to peg that as an exact number. And even that, it's not an exact number. We use a number as a stand-in to represent a general consensus, a general feeling of like where the market is. And I think that number is 400, maybe even a little more than that. And we can see that we're sitting on a 4-week average of 396. And the last week of October, first week of November, we were at 411. So just this bit of data by itself might indicate that, hey, we're now in a balanced market, and a little more inventory on the market would move us up towards we'd go from a balanced market to a buyer's market. And then, hey, all you buyers that want to come work with me can now make offers that undercut the price and all of that. And that could be the case. Come talk to me again next month and the month after, and February and March and April. We'll see how the rest of the data moves along with it. Now, if it becomes a buyer's market in and of itself, that is not a good thing, because if it is a buyer's market, that means more buyers are going to come to the market, and they're going to throttle that buyer's market pretty quickly when they start trying to outbid each other. There's a yin and a yang. It's a balance to all things, light side and dark side, a little bit of the force there. But moving on, again, all of these data points tell a story, and we look at them individually, but they all definitely relate to each other. And this is new pending contracts. This is on a weekly basis. This is the one that is driving a little bit of the previous number we saw, where there are more homes on the market, in that there are slightly less than there have been. But this particular data source, actually, the statisticians give us an expected range and an actual range. And we're under the expected by a little bit. Our expected for the last week of October was 35.1, and the actuals were 32. Now, on a percentage basis, that's 8-9% under, but just on a sheer numbers basis, it's 3. It's just 3. It is under. Again, we've talked already about the seasonality of the real estate market here in not just in the Greater Lafayette area, everywhere. It's everywhere. We can see it builds through the summer. We get to May, we get to June, July, and August, and then we would expect it to fall off. We would expect it to fall off quite this quickly. If we look back to October of last year, and let's go week of September 30th, we were at 40, we're at 35, we're a little under. Again, government shutdown October 1st had basically zero effect that week. And this is pending contracts. This is going, hey, I would like to buy this house. Here's my offer. And the seller going, yes, I accept your offer. So this is, in some ways, the most real-time result, because if you had any doubt about buying a house, if you thought the national economy was imploding on you, you would not write an offer. You would not send an offer on a home. You just wouldn't. People have to move all of the time. It didn't fall off that week. I'm going to go with this data shows it didn't make a whole lot of difference. It's still in the ranges of what we have been seeing. And while we talk about what we have been seeing, if you don't know this, I'm Geoff Gooch with the Russell Company powered by App Properties. And if you would like to talk about home here in the Greater Lafayette area, go to thelafayettereal.com/YouTube and reach out and let's work together on buying and selling here in this market that we are analyzing in so much depth, because our next number is closed sales. The house is yours now. Congratulations. Here's the key. You got all the way through the closing process. You got through signing your name a whole bunch of times. Check it out. Just look at the graph for a second. Goes back about a year. But here, the last week of October, we expected 38. We had 40. The first week of October, last week of September, first week of October, we expected 36.3. We got 36, dead on. The number of sales that got to the closing table through the month of October 2025 was exactly where we expected it to be. Doesn't seem to be falling off a cliff by any means. Falling off with expected seasonality, certainly, yeah. But moving on. Price. I love talking about this one. So two of these related together. We're going to talk about median sales price, and the median for the week of October 27th was $317,000. But if we just look at this chart, this line that I'm following is a $300,000 line. So a low of about 260 and a high of about 360 with a median right in the threes. If we just run a line through where that median would be, where that halfway point would be. Goes up and down because we're looking at a weekly chart here. We're not looking at monthly or yearly, so we're going to see definitely a little bit spikier data here. But the week of September 29th, first week of October, it was down to 277, but back up to 327, moving around in that range that it has been moving. So no collapse of price in October by any means. But this is the one, when I say this, what I like talking about this one. This is the one that I really like to talk about because people are like, I'm not buying till house prices come down. I'm going to give a little bit of a caveat that don't freak out at the last data point in this. There's a reporting error in this chart. I went back to the data and checked the data, and this is not reflective of the actual data just on the last point, and it looks worse than it really is, and it's not bad. But this is percentage of asking price. This is, did the seller get the price they were asking for? And the 100% line is the next to last line here along the top. And we can see that it's been hovering in the 90s. This is the low point over the last year was down at about 94%, 93.7%, and it's been up above that all along. Then we get down to this last week, and it got down to 91.8, so 92%. I went back to the data and ran the numbers manually, and it is north of 95. I didn't note the exact number down. So this is a little bit of when this data clears out, the statisticians sometimes have to go back and do a little bit of cleaning on the data when weird things happen. Sometimes like a final price didn't come in, so it'll put it at 0 instead of the actual price. There is automation building charts and things like this when you're talking about these large data sets, but there's always a little bit of cleaning to be done with it. And when we're talking about trying to use it in a short time frame like we are, this data just locked up a couple of days ago. So it does take me a little bit of time to clean that data and do some QC on it, but I did my own QC. And so it is more like in the mid 90s, definitely above 95 and really 97, 98%. Only in like the last month or two has it come down to 95-ish, 96-ish in that area. And so what the sellers are basically getting 3 to 5% less than their asking price. And that really comes down to concessions, asking for help with prepaids, because the asset is the house. That is where all the money is for both the seller and the buyer. The seller might hold the asset and have all of this equity in it, but the buyer is not walking around with $200,000, $300,000, $500,000 in their pocket. Their equity is going to build over time, and they're going to build that into their debt of their mortgage. Sometimes the asking price is going a little bit above, and then we're going to ask for a credit off of that to bring it back down to the actual ask. And sometimes we're going to go at the ask, and with the market, with the number of houses that are on the market currently going up a little bit, we're going to go, you know what? We're giving you a full price offer, but we're asking for 3% concessions to help pay for a new roof, to help pay for new AC, to help pay for closing costs, to help pay for our broker, whatever it might be. And there are some loan products that most loan products have various amounts of how much you can, what percentage you can do that with, 3, 4, 5, 10%. Not a mortgage loan officer, but some a little more, some a little less, but seeing around 3%, 4%, 5% off of the asking price to deal with those transactional costs is completely normal and expected. And all that we've really seen over the last year or two is just a move off of what if you're offering if you're selling your house for $200,000 and I need 3%, I'm going to offer you $206,000 and then ask for a $6,000 credit. Now we're going, hey, $200,000 and I need 3%, $200,000 and I'm just asking for that 3%, and sellers are accepting it for the most part. Houses are sitting on the market just a little bit longer. So the number of homes coming to market is about the same. The number of closings is about the same. They're just sitting on the market a little bit longer and don't have days on market in this weekly report. Let's look at the monthly report to look at that one number, and then I want to show you one other number. Days on market was not in that report. New pendings, market momentum. Here we are. This is the entire Tippecanoe County area. October 29. 4 weeks. And we can see coming back to April, it was 5. So we've gone from slightly less than a week to about 4 weeks. We are now in historical norms. But if you look at the banding here of how the statisticians are looking at it, and they're looking at the data over the last couple of years and doing math and all that, running some algorithms through that, we are above the banding of what's expected. So those days on market are drifting up. Is that a good thing? Is that a bad thing? It's a good thing for buyers. It puts more houses on the market, gives you more choices in front of you at any given time, and gives you time to be thoughtful about your purchase and about your offer. You can look at a house and then have a little bit of time to think about it before you put an offer in. Now, if it's the perfect house at the perfect price, that's no guarantee that it will be available tomorrow. So you still have to act when you see the one that you want. Is it a good thing for sellers? If you need to move now, then waiting almost a month can be bad, but it takes about a month to close. In and of itself, it's neither good nor bad. When the rest of the market starts moving a little more, we will know a little more. It's really early in this reporting process to tell what's happening here. We have this one or two whacked out data points that are really changing, the days on market and the number of homes for sale, but not a lot of other data points are moving along with them just yet. Another month or 2 or 3, hopefully we will know a little bit more. The other numbers will start to move in chorus with these numbers that have already moved, and we'll go, oh yes, this was indeed the beginning of a change, or no, this was just a weird outlier, a confluence of some strange events, and now these numbers that have moved are going to start to move back into the expected range of the rest of the numbers. I hate to say we don't know. I'm also not going to lie. Like sometimes you just don't know. But there's one more chart that I wanted to look at tonight. It didn't load. I'm going to hit refresh and see if I can get it to load. There it goes. Okay, it loaded. Fantastic. We're talking about the market as a whole. The fact of the matter is that there are actually 2 markets and really a lot of sub-markets going on here. We're going to talk about inventory by price. Do I want to talk about inventory? Is this the chart? Yeah, do I have market momentum? Pending sales by price. Pending sales by... This is the one that I want. I want days on market by price. This is what I want. Here we go. Days on market by price. This is the 12-month rolling median. It's currently at 13 for all prices. But check this. The headline, under $250,000, it's at 6 days on market. And at least $250,000, it's 17 days on market. And we can break that down even more. We talked earlier about some of these new developments and how hard it is to get a sub $200,000 home here in Tippecanoe County, and the ones that are available need some work, need some love. In the $150,000 to $250,000 range, it was 8 days median on market, so a week plus 1 day. So if your house went on the market on a Friday, by the following Saturday, so not the next day, but the following Saturday, you had an accepted offer on the median. But a year ago it was 4. So it has doubled. It has gone up by 100%. That is a lot. It's a week. When we move up to the next price band, $250,000 to $350,000, and it was 10 days. So if your house went on the market on the 1st, it sold, had an accepted offer about the 10th. And it has gone up about 60% from 6 days to 10 days. But this is my tale of two markets. Check out this grouping here. Between $0 and $350,000, it's 3 to 10 days. Half a week to a week and a half. There's a big jump here. $350,000 to $500,000, it was 19, and now it is 26. It is almost 4 weeks. And we see a similar $500,000 to $750,000 went from 20 days to 33 days, 4.5 weeks, more than a month. And if you're fortunate enough to have enough cash or equity to buy a premium home, $750,000 to $999,000, it went from 28 days, from 4 weeks to 40 days, a month and a third. And then finally, our $1 million plus homes, 76 days, so 2.5 months. But what I really want to talk about is we're talking about a tale of two markets here. If you are sub 350, guess what? 10 days. Median days on market. If you are 350 to call it 750, we'll look at these two as a band together, you're 26 to 33 days, 4 to 4.5 weeks. So if you're buying a house for up to $350,000, you still got to move pretty quickly. Now, do you have to make a decision overnight? Maybe not, but we are talking about averages here. This particular average is a median. This is the middle number of the data set. But that does mean that if there are 3 houses, one could sell in a day, one could sell at 10 days, and one could sell at 20 days. And that 10 day would be your median. And so, yeah, the one that sold in 1 is still in the average. If you like the house, you got to buy it. But at most, you have about 10 days on the median. Now, you might have more days. If you're a first-time home buyer, if you're not buying a premium product house, if you're buying a slightly smaller house, if you're buying a house that needs some work, any of these things, then the market is still moving pretty quickly. If you're buying a premium house, a new build, a smaller new build, something that has been updated, something older has been updated, a home with a lot of square footage but in an older neighborhood, and then moving on up, if you're buying a true luxury house, then you have 4.5, 5 weeks to do that in. But it also means that if you have something to sell, that it's going to take a little bit longer to sell, and you've really got to price it right. You got to price any house right to sell. But if you have your $250,000 home priced wrong by a few $1,000s, then there's enough homes for sale and they're moving fast enough that you're more likely to get some offers. If you have your premium house priced wrong and you think your $500,000 home is worth $600,000 and the market says no, then you're going to sit a whole lot longer and wait a whole lot longer to get somebody who's going to come to you with an offer that you might find insulting, which is to say that, when you're a realtor, and I am one, I'm Geoff Gooch with the Russell Company powered by App Properties, and I'd love to advise you on the sale of your house, but we spend a lot of time and care and love and logic and math and analysis pricing homes, and the market sets the price. So you really got to get your marketing right. You really got to get your price right. You really got to get your approach right. You got to get everything right. And it really is a tale of two markets. It's 350 and below, and then 350 and above. But that is what the market looks like here in Tippecanoe County through the end of October of 2025. If you had found this useful at all, please hit the like and subscribe button. It means so much to me that you help out with others finding our content here on YouTube, here on the Lafayette Reel. And if I can help you find home here in the Greater Lafayette area, go to the LafayetteReel.com/YouTube and fill out the form, and let's figure out how we can work together to help you find your perfect home or sell your perfect home and find your next perfect home.